Camera. And we're live. What's going on, everybody? Welcome to Wolf. Welcome to another stream, baby. We got Mr. Bits of Wealth on stream. We got Mr. Dom on stream. You guys know we do all these spaces all the time, talking about the markets. And we throw one on the weekend. You're taking a 50-50 bet whether or not Trump's going to fire off a tweet that nukes the market or pumps the market. So far, it's been relatively a chill past 48 hours or so. So we're just going to dive into the charts a little bit. We're going to take a look at what Bits and Dom are kind of paying attention to in the market. We'll dive into some analysis stuff, some educational things that we normally do on these streams with these two guys. And if you guys have any questions, of course, definitely drop them in there. If there's something you want us to check out or explain further, definitely drop those in the comments as well. But I'll turn it out. Most people who are jumping in these streams as well probably are familiar with Bits and Dom. But real quick, Bits, if you could give us like the 30-second synopsis on the type of trader you are, the time zones you stick in, if you're taking swing trades or if you're holding 2-year long trades like Calvin is, or kind of where you're at as a trader, and then we'll hit Dom's as well.
Yeah, I'm kind of like a little bit of a day trader at the moment. Kind of, I like to lean towards swing trades, but definitely I've been doing a lot more of day trading and even a little bit of scalping just based on the market conditions. Yeah, I like to think that typically I'm a little bit more of a swing trader where like last year, for example, a lot of the trades I took, were a week long, 2-week long hold. Some of them were even a little bit longer than that. Yeah.
Very nice. Very nice. Dom, over to you. I feel like we're in the space. I'm like, yeah, I'll flip the mic over to you, but we're just looking at it's just us three on the stage today.
Yeah, totally. I also have been more of a swing trader over the last few years, but I guess the last 5 months, I have definitely done a lot more short-term scalps, usually in and out within the day. And when the market is trending, which we haven't seen recently, I usually like to hold trades for like 1 to 3 days. That's usually my sweet spot. And as for finding entries, I'm usually, 1 hour to 4 hour. And then for, intraday trades, it's 5 to 15 minute usually. And I like to use the order books for all my Confluence, what I'm seeing on the charts. And then as for just charts, my foundation just revolves around basically volume profiles, very important levels, and then VWAPs as Confluence.
Very nice. Very nice. Well, I'm excited to chat about that. And by the way, when we pull up these indicators, if you have 2 or 3 of them pulled up on the charts, just if you could give like the 10-second, what is this like for a VWAP, or if you're looking at RSI or something like that. Because the goal of these, honestly, we talk about this like every single day. We're probably beating a dead horse, but hopefully there are new people coming in each week and understanding that, hey, if I want to survive or even participate in this market without getting absolutely just crushed, you have to be able to understand these charts a little bit, especially because the majority of people being followed in these industries right now don't have any of that knowledge. And we see that played out all the time in the timeline where they're just calling for stuff or they're saying they're buying this or buying that. And you're just like, dude, you have no idea what you're talking about. Like, you can't operate on this 2021 thing where you just buy random stuff and they pump for no reason. It's just not that kind of market. You just have to be able to give yourself an edge here and understand these charts, even if it's a little bit. Even if I think Bit says all the time, if you just understand, or I think it's Price who says this, if you just understand a little bit of support and resistance, you could give yourself a massive edge over 90% of this industry, which is kind of sad. But it's not that hard to learn, I think, and it can be simple. But either way, we hope to kind of instill a little bit of extra critical thinking here. And so we got some legends up here to kind of walk us through this. But I'm not sure if Bits or Dom, if either of you guys are like itching to pull something up specific that you guys have had pulled up on the charts for a little bit that you want to dive into. But I'm happy to toss it and then we can kind of dive into these charts together. But I'm not sure. I can only see Bits of Wealth nodding in his head. Maybe we'll hit Bits first and we'll pull up some stuff he's looking at and then we'll jump over. If Dom has any thoughts on anything Bits had, we'll jump to his stuff as well. But Bits, I'm kind of curious what kind of things you're paying attention to right now. If there's anything specific you want to pull up here.
Yeah, let's start with this because I've kind of been sharing this and talking about it over the last few days. But this is total crypto market cap. And what I'm kind of watching right now is, we were moving down into this support zone here last week or the last few weeks, actually. And, there was a lot of fear in the market during that time, a lot of uncertainty. But we were actually moving towards, the bottom of this high time frame channel. We were moving into this low volume node on the volume profile here, which is this this indicator here on the side that you can see, and you can see it has like peaks and then it has valleys. So we're moving into a low volume node. There was just a lot of confluence that was saying this is a time to pay attention and to have a bullish bias, right? So I threw these little tags on here as I've been sharing it, just to kind of help people visualize why this makes sense, right? Like at the bottom, unfortunately, a lot of times retail is fearful and they're bearish and they start closing out positions that they opened higher up, right? Because they're underwater. But these are the times where people that are trading the levels, they're kind of leaning into a bullish bias and they're saying, okay, this is opportunity here potentially. Even if this fails, because there was no guarantee that price was going to push up from here on this chart, right? Same for Bitcoin or any of the specific charts, but there was really no guarantee that this was going to hold a support. But if you understand probabilities in trading, you knew that this was an area that you had to lean into the probability of a bounce, just based on the data. And so what we see here is that we got a bounce here, and I remember when we were finding the bounce here, I shared this exact image, this exact chart here with the text and everything, and I said, look, when we get back up here, this is where the euphoria is going to start coming back in. People start getting bullish, people start opening leverage longs, people start trolling the bears, all this stuff. And here we are, and we are getting a little bit of resistance up here, kind of as we were expecting. So this is one of the main charts I'm watching, along with stablecoin dominance, which are kind of like just mirrored charts of each other to a large degree, right? So on stablecoin dominance, you're basically getting a reversal after sweeping this low from August of last year, which marked the bottom for BTC before the entire market reversed. And we basically came up here on a 3-day chart and just, trapped slightly above that, swept it, and then we're heading down now. So we'll see what happens. We're still in, I'd say in a place where we have to be a little bit cautious and kind of trade it day by day. There's no guarantee that this thing is not just going to reverse and continue on up. Certainly could be the case. But again, if we're speaking purely of probabilities, this has been that area that I've been talking about for over a month now, I think, about a potential reversal on stablecoin dominance. It was looking bottomed. It was reaching this like 8% zone that every time it's come up here since breaking below it has marked a significant reversal, and has led to significantly higher price on BTC. So if that's the case, should we not be expecting this one more time, right? And same thing would happen here, getting a bounce down here. What happened last time it bounced, went up, getting a bounce. I mean, you should expect, oops, did not mean to touch that. You should expect here, like, are we just going to get another bounce, right? Doesn't mean there's not resistance on the way up, but was this a good opportunity to get in? And then I'll kind of hand it off there for comments from Dom or from UK.
Definitely. Dom, I can pull up your chart here as well. One sec. Boom. All right. I think I got Dom's screen pulled up here.
Yeah, so I think Bits had some great points there. The stablecoin dominance was something that, to be honest, on the short time frame, it really does just look like Bitcoin. It's just inverse. So if you inverse that chart on like a shorter time frame, it really just tracks Bitcoin. But I was under the similar concept. Bits was using his horizontal channels there, and diagonal channels, and a similar concept that I use, just adding a little bit more confluence to the idea that where we hit down there was a really high confluence area to expect some type of bounce to come in. I basically looked at these 4 levels: the yearly rolling VWAP, which has been a historical bull market band. If you look back in history, anytime that we fully accepted below that over the last few cycles, prices did go significantly lower. And then same thing with the 50-week EMA. That's acted as a bull market band. And also, too, if you throw a VWAP on the halving each cycle, anytime price breaks out of that, it usually does not accept below that until the bear market has begun. So with all of that in line, and then you also had the March highs of about 73,000, 73, about 73.8. All of that confluence there really told me, okay, we should be expecting a bounce regardless here. Because if not, we definitely have the first structural problem on the chart since the 15K low. And I like to use the staircase method, or just the staircase concept of like, anytime we break a resistance, we really shouldn't go back below that if we're in an uptrend. And we could see anytime we kind of chucked higher, we didn't accept below that previous level. So we could see that's just pretty simple, just, basic technical analysis, that even if a low is in, or sorry, even if a top was in for, say, multiple months, we should be expecting the reaction that we saw. And of course, we have seen that. So that's really my high time frame view. And then if I look on a shorter time frame, what I've been looking at here is, if I throw these smaller VWAPs over here, we did, technically speaking, we did break the downtrend since January over the weekend. We're not too far above it, but it's such a beautiful downtrend. Not many ways to draw it. I mean, it's basically here. Maybe you could adjust this a little bit, but like, anytime we've tried, we've rejected. But here we have acceptance above, and we actually even have a mini retest as of right now. So I've been looking at this area here. It's similar to what Bits just shared as his rejection area. And it makes sense because we could see we had all these high volume nodes, which means the most amount of transactions since January actually occurred within this range. So usually if price can accept back below, if price can accept back above, it probably is going to look for the next area of interest. And at least for me, that next area of interest is the quarterly VWAP. So about the 88 to 90K region. And we have a lot of orders on the order book that also line up with that. So, depending on how tonight happens when the futures open, because we had a little bit of a news that said that Trump was going to be pausing or removing the tariffs on computers, phones, and chips from China, which that's a pretty big thing, because, that's like Apple, Microsoft, NVIDIA, a lot of those companies should benefit from that. So if we see further reaction from the stock market tomorrow, and specifically tonight, I am looking for a push. Maybe we need some more consolidation up here, staying within this 82, 83 to 84 range. I am looking for a push up to 88, 90. And I think that would be the true test. Is this a dead cat bounce, or can we get some more steam behind this revival? So that's really all I'm looking at here on the short term. This is a clear downtrend break. We are trading above the high volume nodes. We are also trading above the monthly rolling VWAP, which we can see since the last time we were above that was February 1st. So it's been over 2 months since we've accepted above this line. And I love these rolling VWAPs here. So technically speaking, we're seeing the first little signs that a trend shift is occurring. We just need to see bulls step in and bulls push us through to that next level, which is probably going to be in line with the stock market tonight and tomorrow. So that's how I'm looking at it. And yeah, that's really all I have for Bitcoin. I think it's a pretty simple view. But then, at the same time, I guess you really want to watch out if we lose this 82 level and basically this downtrend. If we get back above here, that we would consider this an entire failed breakout.
Yeah.
We're just right back in our downtrend. So we would have to reevaluate at that point.
Yeah, that's a great point. The trend line is very powerful there. That's the only reason I even entered that. Even though Bits indicator went off, that we might be topped here because of that exactly what you said. Potential structure break. And if we can hold, then we might actually cook for a little bit.
Yeah.
If not, though, that 2 to 3 month chart looks pretty brutal. I mean, that chart is just literally down only, but it is nice. I mean, that's a decent push above that. So, and every time now, like Bits showed me these parallel channels they draws, dude, those are like probably the best thing, I think, for a beginner trader to just visualize. Oh, here's the range. It literally just does this. It does this. It was like, Bits, that was like probably one of the best things I've seen like on a stream in terms of like just traders. Yeah, like that is phenomenal.
I feel like it's like what bad price says a lot, right?
It
like
does. It is.
Price is always in a range. And if you can identify that range, then, you gain some edge. But yeah, I think that like the difference between like trend line strategy and using channels is, for me at least, like channels are dynamic, meaning every time I get a new piece of information, I have to update the channel.
Mhm.
And trend lines, a lot of times, is you're just kind of looking at like the historical trend line, right? Like people are looking at this and saying, oh, I'm going to put like I've seen people do this, right? And maybe they do it on the BTC chart, not on the total chart, but just as an example, right? Like someone could be looking at this and say, oh, you've got a trend line from down here that price is like respected, and it broke the trend line here, and it's over. It's so over because it broke that trend line. Well,
So
and
over.
it could be like maybe this thing is going to go lower, but at the same time, like Dom, I think we were looking at some channels from the lows, I think on BTC, right? And like there's some different ways you could draw a channel on BTC from the lows.
Totally.
That you could make an argument that, hey, maybe this thing's intact. Maybe nothing has really broken. Like what if you're seeing something like this? Like what if you're well within that still? What if you're at the bottom of that, right?
Yeah.
And there's one more push up. So yeah, channels to me just seem like they're a little bit more forgiving, along with like having zones instead of precise lines. Like, oh, under this level I'm bearish, and above this level I'm bullish, or what. Like it's just, to me, a channel in a zone is just more forgiving, because I'm not looking for something at an exact line. I'm looking for something near a zone or near a channel extreme, right? It's just a different way to look at it. I feel like when you're starting out, you're looking for these like hard invalidations. And over time, you just kind of learn that it's just not that black and white. Like it's really not. It's a little more fluid, and I don't know. Like there's you got to give yourself a little bit of room.
Agreed. Yeah, no, that was a great visual there, I think. I'm also curious on, in this kind of market, when specifically at this moment, since Don brought it up, of potentially breaking a pretty long trend downwards and we push above. Now you got to see if this is going to be just a fake out and we just go right back down. And this was really just to sweep that and just get people out of the market, make them feel excited, get rinsed again, or if we're truly going to trend up. And now we can prove all these influencers they've been right this whole time. In fact, we've just been not playing 4D chess like them. But in this moment, is there anything else you guys look at? Are there any indicators that give you a bit of an edge to know early whether or not this is just that fake breakout, or if this is, it's the only way to see if it just back tests that and then falls below it? Or is there anything else you guys look at in this particular moment, I guess is my question.
Yeah. I guess I'll chime in real quick. I don't have it on here because I use the web-based for the order flow that I usually look at. But one of the things I'll see is if a breakout's real, we should see a lot of venues participating. So we want to see a lot of exchanges participating in that pump. It's not just Binance pushing the price higher. And then on top of that, we want to see, is this move directly triggered by the perpetual market? Because I'm sure you guys know, I think I've referenced it before, 90% of the short-term moves on Bitcoin are all from the derivatives market. The spot market really doesn't like control the short-term price action of Bitcoin. It's all levered longs on Binance and on Bybit. So when I see the breakout, I'm looking, is there steam behind this? And I posted yesterday, I can't share it right here real quick, but essentially I said that this is a weird sign. It was a Saturday morning, and we had all spot venues actually pushing price higher. So it wasn't just the perpetual market yesterday when we saw the move from, I don't know, from like 82 up to, almost 86 last night. The spot markets were actually heavily involved there. So that doesn't mean that we're going to push higher, but what it does mean is that this pump does have some more substance behind it, rather than if it was just the perpetual market and the spot market didn't care. But on Saturday, the spot market actually did care, and Binance, Bybit, all of them were actually buying in line with the perp market. So that's just one piece of evidence that I use. Like, okay, it's not a perfect indicator. It's not like, oh, the spot market's buying, we're going to keep going. But it's going to tell you, does this pump have more steam behind it? Is this pump just a fake out? Because if it was just the perp market yesterday, I would be like, this is probably a fake breakout. But as of right now, that's why I'm like, okay, we got to wait to see how stocks open. We got to see, because under the hood, it's not looking too bad. There are people actually interested that are pushing this higher.
Yeah, a lot of the stock people I've been listening to also are picking up a lot of these dips. I mean, generally, if we see a stock market crash of 10, 15, 30%. Buying those has historically been the greatest entry you could ever get. Even if they take a little while to play out and we play sideways for a little while, generally speaking, it's a play. And I know a lot of the stock people have gotten into those positions on these dumps. And so I know a lot of them are feeling bullish, even short to midterm here. So Bitsum, I'm curious if you have any thoughts on that.
Yeah, while you're saying that about the historically buying the dips, I'm like, all right, let's look at these the S&P and these historical dips and when it's maybe not been a good idea to buy
Good idea.
these
Let's do it.
dips. Oh man, the dips that kept on dipping, huh? I mean, I don't know. Like, look, I'm kind of comparing it to some of these big drops, and like I think on a prior stream we looked at also where there was divergence that was building in some of these. So I'd have to go back and see, but a lot of times some of these were on divergence, and I think we did a deep dive on it last time. But yeah, I mean, I was just gonna say, and more for comic relief than anything, but it's like, you think you're getting the deal here, and but what if it keeps going down here, right? Like
It definitely could.
Look at back in 2008, right? I mean, this was a 60% move on the market. I mean, that's massive, right? And so think of all the people that thought that they were just getting generational entries right here for 20% discount, got this pump up, and then the real move came after that, right? So
definitely,
I don't know. There's I think there's a lot to be said about if you're a long-term investor. I mean, look at this, right? Like over time, where's this thing headed? It's heading up and to the right. Like there's no doubt about it, right? But there are these historical periods where after a market is topped, I mean, it can spend just ridiculous amounts of time before it finally gets back above. I mean, look at this period here, right? Let's change maybe how we're drawing this. Remove 3 drawings. So back in 2008, when you got that high there, I mean, you basically spent here. Hold on. Let me make sure I got this correctly. Yeah. Look at that. I mean, that's almost 5,000 days. Geez, that's a long time.
Jeez,
what is that?
Bro.
This is from April. Ooh, aren't we in April right now? This was from April of April of 2000. You really didn't break that ceiling until April of 2013. Isn't that interesting? April to April. That's crazy. That is a little funny.
Well, people say, like a lot of the people have said, they're like, look, if you're slightly nervous that America has topped as a country compared to some of these other world powers, this up and to the right thing might be over. But if that's the case, you got other problems than like if your stock is going down kind of thing, because the world is about to change. Otherwise, a lot of these stock guys are like, look, we're going to continue up only. But that's a crazy chart. That is, how many years did you say 2000 to 2013? Is that what you said?
Yeah, 13 years. This was 13 years where it basically the market just chopped, man. And sure, if you're trading this, look, there was massive opportunity in that, lots of volatility even in this. But if you're just an investor and you're just holding this thing, I mean, 13 years to just get out. If you bought the top, you waited 13 years. If you didn't get out here at break even, you waited 13 years to go in the green, basically. So, and that wasn't that long ago. I mean, this is 2000. It really wasn't that long ago. More recent examples would be like here, you spent from basically December of 2021 through Q1 of 24. If you bought that top to basically get back out from under that. But historically, yeah, the market will go through periods where, look at this. This is let's say it topped here in 72, 73. You really didn't get out from that until like 82. So yeah, it'll spend some decades sometimes where it'll just go sideways. And I'm not calling for that necessarily here. I'm just saying that there's I think there's like a time and a place for everything. And even just with something like the S&P, which does just go up and to the right with enough time, there's probably some wisdom behind, just being able to get in and get out and recognize when maybe this is a better time to be in commodities versus equities or in cash or bonds or whatever.
Mm.
And crypto hasn't really had this type of data set where it's got like multi-cycle. Just I mean, we talk about, oh, we've had, we're following the 4-year data. Yeah, we've done that, what, 3-4 times only? Like, come on, it's not that much history, truly. So, I'm eager to see how it keeps playing out on the high time frame. I like looking at the total charts a lot, because to me, this gives you just a very clear picture of where crypto is. Like, you can get super in the weeds with like BTC or alts, but this is all of it. This is all of it. The total chart is all of it. And for me, until this structure here flips back to bullish, this is still a downtrend. I mean, what would I need to see? You'd need to see something like that to start turning bullish structure here again, right? And we currently don't have that. So either we're going to push through and flip this, or potentially if you get a rejection here, you're looking for that higher low to then take you to do something like that.
Does this chart include Bitcoin, or is this crypto?
Yeah, this is everything. This is everything. This is BTC, ETH, all the alts. This is everything. This encompasses all. Yeah. Interesting. So all of crypto is still very much in a downtrend right now. I mean, this is indisputable. Yeah.
Definitely. I'm curious if you've got any thoughts in the last few minutes of talk with the bear market. I mean, that's pretty crazy. I think it's healthy to instill a little bit of just pure reality. I mean, there's no reason to think that, like Bit said, there's no reason to think that is exactly what's happening right now. But it's healthy to say, like, these things can happen. Like, just because it's been like this doesn't mean it can't be like that for a while. And that would be an entirely different market, which everyone would have to learn how to trade. And like you showed, there are opportunities even within a 13-year, just basically just averages a nothingness going on. But there are tons of this stuff going on, in which case the kind of trading we've been doing is still just applicable. You're just trying to identify where there are generationally or where there are generally supports and resistance, and you're just trading in those ranges. I mean, in that kind of market, you guys in price and some of these guys are going to be making absolute just racks during this time period. It doesn't matter if the price is going up and to the right, as much as people just being able to trade the ranges,
Yeah, I think it's definitely not wrong to, share the evidence that, yes, we have seen these before. And we've seen, multi-year bear markets in the stock market. Throughout this time, there was, of course, stocks that did probably go straight up as this was going sideways. But the majority of the market was, in a corrective manner for 13 years, basically. And I think now it's like, who's to say and who really knows if we're entering something like that? I don't think anyone does. I don't think any of the macro experts or anyone don't. But I will say, there was fundamental differences here. Obviously in 2000, we had a few years where stocks did thousands of percent, growth that we've never ever seen before. And of course, we haven't really seen that the last few years. It's been a few 100%. And then this was 08, which was a fundamental problem within the mortgage industry that caused a global economic crisis. So I don't know, it's hard to compare apples to oranges here, but I guess as for the short term here, we hit the level that made sense for the bounce. We see a perfect tap of our April high, or not April, January of 2022-21. We had a VWAP perfectly from the low, hit that perfectly. So I think right now it's like, we could sit and say, what's going to happen with these tariffs, but we don't know. Trump could come out tomorrow and throw another curveball out that no one could ever predict. So, trying to look 6 months in advance here it's hard.
Here's a channel for you, Dom, and Cade.
What's this?
Yeah.
Oh.
Perfect.
We're on the fourth touch of that upper channel line.
Wait, that's actually kind of crazy though, looking at that.
Yeah, this is back in starting in 29, 30s.
Holy crap.
So and notice this is also interesting, right? So this was before a big correction back then, but this right here was tech bubble, I believe, right? And then here we got close to tapping it. This was in 2021. And then we're back up here. This is the
interesting.
This is
but each drop being less
AI
than the one before.
Yeah. So with this channel, like what I would call out is that obviously towards the upper end of the channel, this is like overextension. so you want to kind of revert back to a mean and to a place of balance. A lot of times you just look, it moves back to the median of the channel. Even here, when it was overextended to the downside, it goes back to the middle. Overextended to the downside, goes back to the middle. Finds balance, right? Same thing. Get overextended to the upside, finds balance. So yeah, I mean, what would it mean if we came back here? Well, we did a measure of this roughly here, right? And we said that was like a 50%, 56% correction. What would a 50 something percent correction? I mean, we're right there. Look, back to the middle would be 59, 60.
Wow.
It'd be about similar size correction. If
that would be just like
happened.
the 4-year cycle playing out, 60% drop on Bitcoin. It would play out exactly like it's played out in the past. Liddy Trader would just be rolling again.
Yeah, and this is all speculation. Like obviously,
Sure.
there's a lot to Dom's point. There's a lot of nuance in all of this, but I do find like just looking at stuff like this just fascinating, because then it forces you to dig into it and then say, okay, what is different this time than 2021, and what is different from the 2000? What were some of the reasons why it moved the way it did? But this gets you curious, right? You show someone this and it gets you curious, and it makes you do the homework, is essentially what it does.
I love that. That's a fascinating chart. Dom, I'm not sure if you've got any thoughts on that. I'll pull your screen back up, but that was a crazy chart. I don't think I've ever seen the 80-year chart or the 90-year chart, just like I was shown from Bits just now. It's a historical moment for me.
Yeah, I mean, it's definitely, there's a lot to unpack there, and it's all good for perspective, but at the end of the day, I think that we're in a new regime now where ever since COVID, the Fed really likes to show its power, and to think that, they will let the global markets crumble for 10 years, I just don't see it in the cards. What I think is going to happen is if this economy does crash, if the global economy does crash, I think that we would see it be preceded by infinite money printing. I think that we're at the point now with the way that the economy operates, they would probably print their way to death, meaning we would probably see the most crazy blow off top bull run in all of risk assets. And then at the same time, AI, like that opens up a whole other question. I know we probably should talk more just about crypto, but like the AI, era that we're in now, like in my opinion and many other people's opinion that are big into that industry, think it's going to unleash, infinite abundance in a sense with just productivity and just an era that it was similar to the Industrial Revolution. So, we can look back and see what happened over the past 100 years, but I'm more focused on right now. And right now, like I said, we had the tariffs come in and we had them get paused. We had our bounce up. I think what's going to happen over the next few months, granted we don't get anything crazy happen again, is we're probably just going to base out here. Like I think that we probably won't see new highs in a lot of the stock market, probably for 6 months, a year. There's going to be stocks that probably rally right back to highs, ones that are not affected by this, especially ones that have big tailwinds like AI related.
Yeah.
But overall, I think that, we hit the level that we should expect in the bounce. We have the bounce coming in here. And when we have this type of sharp move in the chart, it needs to base out, unless we get crazy tariffs again. Sure, we could look at losing this level. And I think at that point, then we're like, okay, we got some big structure break here. But right now, if you look at the chart, I mean, it's not like a correction was too unexpected to occur. Of course, we had the bubble come and pop, but, you look at this expansion wave, correction, this expansion wave, correction, same thing here. It's like, the charts do correct properly. So yeah, I mean, I don't know. I think just spending too much time thinking about what's going to happen in a year or 2 years or in 3 years, we just got to play this era day by day, week by week. Things are changing so fast. We have no idea what we're going into. We don't know Trump's big plan. But I will say, I'll be shocked to think that Trump will let the markets crumble throughout his 4-year term. I think he's going to use everything he can to keep these.
I did find your blow off top though, by the way, Dom.
What do you mean?
What, on NVIDIA?
No. Well, that you could say that in MSTR, but here, check this out, Cade. If you want to flip I found it right. He said we'd be infinite money printing and a massive blow off top. You mean like this?
Yeah, Oh
I mean, this
boy.
is the S&P. Money printing started down here somewhere, right? For after the COVID crash. I
Wow.
mean, I don't know.
Well, this is the
If this
argument,
isn't a
Bits.
blow off top, I don't know what
It's,
it
it's
is.
possible. So what Dom had outlined too got my brain thinking as well. So if you do see absolute just, we've seen degenerate money printing, but we're at a point where that could just be nothing. That could be the first. That could just be like the inning one of this money printing. Where in my
Yeah.
head, if that continues
Yeah.
to happen, a form of a CBDC is inevitable. But Trump has said multiple times that is absolutely not the direction he wants to head. Now, Trump is just one dude. He's got 3 years left, and then he's
Yeah.
going to have to move on with his life, and the rest of the country will have to decide who they're going to put in charge. And we'll have to see where money is sitting at and how people are thinking in terms of that. But the CBDC comes into play, and money starts to become a bit of an illusion. In my brain, that's where Bitcoin should really take over. But for now, Bitcoin's still a risk asset that's going to get absolutely crushed if the market goes down from this money printing. I mean, I just don't see. I don't know what the catalyst would be before, because I don't think enough people understand Bitcoin. I mean, I'm even in the game and I understand Bitcoin, and I still haven't converted all my net worth. So what is that? What does that really say about my knowledge of Bitcoin? I don't know. I know a lot of people who haven't converted all their net worth into Bitcoin, and I just can't imagine being there right now. But that kind of gets my head thinking, and that's an entirely different like life paradigm. I think if we're in that zone. But Bits, I see you pulling up something new. What do you got?
Yeah, no, I'm looking at Dow Jones Transportation while you were talking. Don't mind me if I start just looking at random stuff. But no, I mean, look, this is another chart that because you're talking about like what would be the signs or what would be the things that we would see before a big correction would come. If you study the Dow Jones Transportation and you go back and you look at this basically a crash in this is front ran every crash in the S&P for the last known crashes that we've had, so this thing was definitely getting really toppy here. You can see there was a lot of divergence on this, and if you actually looked at this compared to here, let me add DJI as well. But I'm going to move it actually to its own scale. Give me a sec here. Pin to scale, new scale on the left. There we go. Okay. Let's look at just this. When you study these two, why am I not? Hold on here. My scale's changed. There we go. All right. Got control back. Yeah. When you look at these two, a lot of times the tops were signaled by the divergence between the DJI and the DJT. So here DJI obviously is up here in well, I was going to change it, but we'll leave it like that in purple. And then you've got the transportation here. Look at this. Watch. I think that this is fascinating. Notice here, everything was moving together, right? You were moving, trending up, making higher highs. Everything is in symmetry, right? In confluence. This is going higher. This is going higher. Notice here, though, right? Here, you put in a double top on DJT, but here you did not on DJI. DJI continued higher, even though DJT topped first. What ended up happening is over time, they get back in alignment and you see that correction, right? But it starts with a divergence on the Dow Jones Transportation. You saw it here, happen there. Same thing here, right? They're both going up, DJI is still going higher, making higher highs. DJT does not. It double tops, right? Then you have divergence. What ends up happening? They get convergent again. They align, right? Happens every time almost.
Wow.
Same thing here, right? You had, and we can zoom in a little bit, but you have high, higher high, and then you failed to break out above that high. Here you had high, higher high, and it continued higher on the DJI, right? So DJI, now you've got divergence. DJI is going higher. DJT remained topped. What happened? Then you got your crash there. Same thing happens here. We're kind of seeing the same thing again, where here you made your top there. Dow Jones Transportation has not gotten back above that. We're still below that, right? And Dow Jones Industrial Average is going higher. So again, you've got divergence. What has happened historically? And we can go back further back, but what has happened historically every time that these two have been divergent? Dow Jones Transportation was leading and it was signaling what was coming. This thing is signaling down. This thing is just not caught up yet. So in my opinion, this thing is still telling us there's a lot more pain coming. The invalidation.
But you tweeted that we've hit maybe it was a local bottom, but I saw a tweet a couple of days ago.
Yeah, local for sure. Local.
Okay.
Yeah, I've yet to get enough data. I mean, I don't know that anyone has enough data right now to say if we're going to make all-time highs or not again, still from where we are, right? But the fact that we are bottoming here, like we can get an agreement on that. There's enough data that, like we can support the idea that there's a potential bottom here. So yeah, the question, I mean, like the invalidation for this is if this thing keeps ripping higher and this thing does not, you're just getting more divergent. So the way you would invalidate a potential upcoming rollover on both of these is I would at some point want to see these get back convergent, which means DJT needs to break above this here. DJT needs to get, make a new high to get back in convergence with DJI. Otherwise, DJI is going to catch up to DJT.
Interesting.
Yeah.
That's very cool. That is very cool. Let me turn over to. I see Dom doing some mad scientist work over here on his other screen. Let me pull his up here as well.
It's like debate club, man.
No, this is cool. This is I love these streams because these are things like for me. If you're a beginner trader and you're just trying to get accustomed to the markets, trying to see what to pay attention to, it's all fun. Like it's all just interesting stuff for me. But the one thing I need to get better at is seeing how these different markets play into each other. Like you'll jump on and you'll listen to a space with like Simon Dixon, and he's talking about this thing going on in Russia, and this thing over here, and this affects this market, and he's like, all these things are tied, but they're part of his thesis, his whole thesis. And that to me is just fascinating because it at least gives you some kind of edge in terms of how money works. And like Dom had sent me like a couple of videos to watch. He's like, hey, watch this video because it'll teach you how money actually moves. And that's when I was first learning about like order flow and the volume profiles and stuff. And that gave me a massive understanding. And I think those kind of things, if you can add more and more of those to your arsenal, it'll give you a massive edge because that's just not something that people are paying attention to. And I think these are where these streams are super great because that's just not something I would have pulled up. So I appreciate you bringing that one up. I see Dom's got some stuff here, so I'm going to turn it over to you, see what you're thinking, or if you've popped something else new that you want to talk about as well.
Yeah, no, I mean, there's many directions we can go through and, talk more about the stock market or the economy and whatnot. I just think that it's this simple. We're in a time that we've never seen before. All of the so-called experts have no idea what's going on in the last few weeks. Everyone trying to make predictions or just pulling them out of their ass. And I just think that, we can look back in history as much as we want, but this is a completely new era. And that's at least been shown through the relationship between assets. I mean, gold has been absolutely on a terror run. We have oil tanking. We have the bond market, actually flying up. So it's a completely different time. And I think trying to forecast, far out in the future, I think it's just probably going to get ran over. It's more so just trying to like throw out a good prediction to see. But I think as of right now, until we have more of an idea of where things are going, we just got to look at the next few weeks and the next few months. And, that's kind of what I was saying about the, the stock market in general is the correction that we saw as of right now, it was a good, fine, normal correction. I think if we lose our current low, then we have a lot more conversation about, are we in a global collapse? Is this going to go on for years? But as of right now, who knows? Who knows what can happen here? Trump can make some, great deals with all these tariffs. The China tariffs can get rolled back. And, who knows? Maybe the Fed will start cutting rates and, start doing things that markets like more. And like I said, we could just start seeing a grind back up like here. And, in 3-4 months, we completely forgot about what happened the last 2 weeks. So that's why I'm just more on the short-term view. So as for Bitcoin, I just wanted to share a little bit more evidence of, what we're seeing here is, like I said, expected. We wanted to see some type of reaction here. I mean, this was a huge level to expect a reaction off of. But at the same time, we still have a lot of ways to go before this turns into a bullish chart again. And I think that the most important thing is to regain this level here. So I call this the prior range value area low. We can see just on this volume profile, I ended it right here, right when the range broke. So we could kind of see what the volume profile looked like beforehand. And of course, this perfectly coincides with all of those lows that we had over the last, 3-4 months here. So I think that, right now people get excited on any little revival. And just like Bit said, I think if we do see rejection here and the stock market doesn't, react well these next few days and we can't get that push to 88K, I think we could see another lower high get established here. And then for all the head and shoulder guys, that'd be your perfect head and shoulders. And then at that point, that's the true test. Okay, are we going to break through here and get back in our range? Or are we going to roll back over and the bear market is going to get confirmed? That's how I'm looking at the next few weeks. So, those are really the levels to be watching. And then if I go back to this chart here and I throw the VWAPs back on, it perfectly coincides with this quarterly VWAP. This was the time up here, like when Bits and even many other people were giving warning signals up here. I was still like, this is a range. We'll play the range as it is. And once we lost this quarterly VWAP here, we could see this blue line and we traded below. This is when I said, things are definitely not looking the best. So on that point, it perfectly lines up with this volume, this volume area or value area low. And it perfectly lines up with this quarterly VWAP. So I think anything in here is good, but it's not like, let's go run dances.
Yeah.
Above here is where we can start getting more excited that we have a structure change in the chart. And I think that's just how the next few weeks are going to go. We're going to probably spend time within here and here. This is probably where I think we spend time. Granted, we don't get any crazy news, and we got to see what happens. We got to see what presents itself. So those are really my thoughts on Bitcoin. I don't think that there's too much more to say as for Bitcoin. And yeah, I mean, I guess the only other thing is, there's some altcoins that look decent. XRP specifically, it's trying to get back in its range. And it's funny because just like we were talking about on Bitcoin right here, we can see that this is Bitcoin's range for a few months, right? Mm-hmm. And then XRP at a very similar range, but it's actually trying to regain it already. We could see that this $196 $2 level, this was the bottom of XRP's range. And we could see that this right now is a clear deviation of that range. And who knows, if XRP is going to continue to show strength, maybe this is the chart to watch to see if this will lead, the rest of the market moves. So same thing here on XRP. I think the 220 level is really the important level to be watching. We had a rejection there over the last, 5-6 hours. And then really just holding this $196 $2 level. I think if we're holding above this range is now still intact. And then above here, at least in my opinion, after seeing a 30 to 40% deviation below its low, just like we saw down here, if we can regain this 220 and we're spending time above here, to me, that is a sign that this downtrend is broken and we could see what happens next. So that's really all I'm watching. I really only watch Bitcoin, XRP, Sol, Ethereum, mainly. Ethereum, there's really nothing to watch. I mean, the chart just looked absolutely destroyed. Yeah. But obviously, XRP and Bitcoin, they both still have charts that don't look terrible. Both of these charts don't say that they're completely broken just yet. So yeah, those are my thoughts on that. I don't know if Bits wants to add more about that or if you had any questions, Cade.
Yeah,
well,
I think
I'll go to Bits first, but I may have a couple as well.
Yeah, I think I like to pick on Dom with the XRP stuff because I know he's watching it closely, and I don't watch it as closely as he does. So every now and then. Oh,
really? Bits, I thought you were in on the XRP stuff, bro. I thought you were deep in that community.
No, dude. I mean, I played the little meme season for a little bit, just because I was early to that. But yeah, no, I don't follow it a lot. I always have an XRP chart up though because I do feel like it's one of the important ones to watch. It kind of signals some confluence with some of the other alts. And, in a lot of ways, it can be a pulse on sentiment or liquidity in the market. There's a lot of people that are just accumulating XRP and a lot of people don't sell it. They will sit on it. I would almost make the argument that I think XRP has more long-term holders like diamond handers than potentially even BTC. I mean, I know some people that have been holding this stuff for years and will not sell it. Like you could not pry it out of their hands, man. You could not pry it out of their hands. There's nothing you could do to get that from them. But yeah, I mean, I think Dom's absolutely right. Like you've got some ranges that you're kind of watching here. I use a 21 EMA strategy mainly for how I look at stuff. But I definitely see where Dom's VWAP strategy makes a lot of sense. But yeah, we'll see what happens here. I was kind of trolling Dom on a space a week ago or like maybe 2 weeks ago. And I think I shared this chart, right? I was like, look, I think it could go down to like 60 cents. And interestingly enough, though, right, I was like looking for a breakdown and then a move back right up here because that's where that 21 EMA is. That's kind of where we're at. Like the 21 EMA is right here. Like it supported it. You see that, right? Supported it, and then it's kind of rejecting from it. Yeah, we'll see how that plays out. I mean, it's still well within the zone, but it's definitely a key level that, you know, you want to see some reclaim and some strength above that, right? Whether you're looking at it through a VWAP lens, or you're looking at it through an EMA lens, or you're just kind of using a general support resistance zone, and you're looking at price action here and structure. But it's the same thing with BTC. I mean, I think a lot of the charts are kind of sharing this. The majors and the ones that have, you know, deep liquidity, they're kind of, ooh, did I just delete one of my, yeah, I deleted the channel. They're all kind of sharing the same structure, which, you know, you can see it on BTC as well. It's pretty straightforward, right? Like you want to see a reclaim and continuation higher. Otherwise a rejection here opens up, you know, some of these lower levels again. But I do agree with Dom fully. I don't know that a rejection here means automatically means lower lows. Certainly could be the case that we're doing something similar to what we did last year, right? So you kind of had the wipeout here, and then you had your higher low. Maybe that's what we're doing here. You've got this that just wiped everything out, and then you're going to get a higher low, and then you'll get the push up, and then we'll see what happens in that 92K range, which was also that zone that Dom is watching, right? Dom, I think you were also watching kind of that 90K, 92K zone on the upside.
Yeah, that's
so
the yearly open as well.
Yep, there you go. So yeah, I think it's like there's a lot of confluence in the way Dom and I look at the charts. We just kind of get to the same conclusion in slightly different methods, but
totally.
Yeah, but we're all kind of seeing the same thing, and it's like, yeah, you know, right now is an interesting time. I definitely can see the case for just some neutral chop between this range here, and certainly could even happen down here. I don't know that I'm really extra bullish or bearish for either of those. For me, getting above here will make me a little more bullish, and getting below here will make me a little bit more bearish, basically. I mean, it's just kind of the way to look at it. Yeah.
You guys, like we had talked about this, I think it was on Lady Traders FOMO Friday, but Price is like big on hedging, right? He's always about hedging. He probably plays a decently tight stop loss, and if we go up, he's great. If we go down, he's great either way. Are you guys fans of this? Like, Bits, do you do it? And then I'll turn over to Dom, because Dom's also doing some
stuff. I do it with you know, like using spot versus like trading perpetuals. So for example, like it's really easy to illustrate it here on the total chart just because of how clean this structure is. But this was the place to get spot positions, right? And I even started picking some up when we first started dipping into this zone back here in March. I remember talking about it, right? Like that 76K drop on BTC initially before we came back and put in this lower one. But that was a good place to pick up spot. And then as you're going up, you can open short positions on exchanges to kind of hedge that in case that does come back down, you can make or keep some of that move, right? There's different ways to look at it, but you can basically keep some of that upside or make some profit on the way down if it does reject. And so that's how I would typically play like ranges, is if you're in a high time frame support, you know, you can take some positions down here, and as you get up into a level of supply or resistance, you know, you might open up some shorts there just in case price does turn around. And if it continues higher, well, you close those shorts, your hedge, you close it at a small loss, but you still got the position that you took from lower down, right? And you do the same thing on downtrending markets. Like you might be trying to get, you know, mainly short because you see something like this coming, but it doesn't mean that maybe you don't bid the bounces a little bit here in the hopes that what if it does keep going up, and if not, then you close it and you wait again.
Yeah, very nice. Very nice. We'll bring up Dom's stuff. He's got anytime I see the multi charts pulled up on his screen, I get excited.
He's about to school us, is what he's
I don't know what this stuff is, but I think you're right. He might school us here.
He's plugging into the matrix here, man.
We're cooked.
man. But yeah, no, I think hedging is great, and Bits explained it well. You know, hedging is probably the best to hedge spot positions. So if you think there's a good area where, just like when we hit 74K, you know, last week, that was a good area to pick up spot, I think, regardless if you're a technical trader. And then right now, or on another push higher, is probably a good area to be hedging that with a short position. And that essentially can, you know, add to your trading account while it minimizes your downside on that spot trade. So yeah, I think it's an awesome thing. I think hedging, though, if you're going to do it, you want to study it a lot, because there's a lot of different ways to hedge. And the best ways to hedge, I think, are using options. And options are very complicated. And there really isn't too many options to use options in the crypto space. The best thing I've used is called Synquote. They're a decentralized options platform. It's just like Ostium, but they actually have decentralized options for Bitcoin and Ethereum. And I've used those a few times to do hedging. And, you know, because option contracts, you can only lose the premium that you spend, but the upside is technically infinite, depending on implied volatility and what the market does before you're at expiry. So yeah, I think hedging is great. I just think if you want to get into hedging, spend a lot of time trying to understand it, because you could get yourself in sticky situations if you're trying to hedge, you know, improperly, or if you're not managing your hedge risk properly. So there's a lot of different ways to look at it. But yeah, I just wanted to throw the order books up here. We'll start off with Bitcoin here. So if we look in, we'll see if Trading Light can load here properly, because it's usually pretty slow. But essentially, if we look back at when Bitcoin was up here, it was this right here is one of my favorite indicators. So this is called an order book skew. And essentially what it's doing is it's looking at all of the bids and asks within a selected period. So I just have my third skew on right now. This is 50% depth. So that means that it's going to look at the current price, add up all of the orders 50% above price, and add up all the orders 50% below price, and it's going to plot the difference. So when this is negative, that means that there's more asks in the book than bids, meaning more people want to sell than buy. And funny enough, this was also one of the things of why I turned a little bit bearish right before this range breakdown, is because I shared that.
I remember you talking about that. Yeah.
Yeah, it was the historical order book skew that the last time we saw it that deep was actually back at the high right here in 2021. And it was at the other high in 2021. So right when we hit that 50% skew right here, that was kind of a warning sign to me that, like, you know, everything is now pointing down. And it was like right within this range. And we could see right when the FTX crash happened, and this is why the order books are awesome. Look, we had the largest bid skew ever in history. See, right at this bottom right here, we could see, look at how many orders were stacked below price. It was like so many people were waiting to buy. And it showed that above price was super empty and below price was super stacked. And of course, that ended up being the low. Right now, it was super.
Good grief.
And this is all like actual data feed. Dahmer, is it algorithmic?
No, this is actually pulling from Binance's order books.
Got it. Yep.
And then it's just showing, it's just historical snapshots of what it looked like, you know, at any point in the past. But right now, we're actually seeing the skew for the first time since January push positive. So this is a good sign that shows we could have a little bit more steam to push to the 88, 90K over the next week or two. So this is something I like to monitor a lot, because it worked so well right here when we had this negative skew. And yeah, I mean, just on the shorter term order books with Bitcoin, we can see we still have a large amount of people that want to buy down here. About 2.2 thousand Bitcoin of large orders down to about 65K. So obviously a lot more positive than you can look from down here. It's like, you know, this only got up to like 1.5. You know, there was not many orders waiting below this range. But here we could see a lot more people got interested in buying Bitcoin. And then right here, this is kind of where I was looking at the 88K, because we have about 500 Bitcoin stacked right there. And then those popped up overnight there. And then the next thing here is Coinbase, because I really only look at Coinbase and Binance, because in my opinion, they're the two main spot exchanges. And we could see, this is kind of why I was super bullish, not super bullish, but I was really expecting a bounce these last week or so, because of all these orders down here. We had about 800 Bitcoin sitting down there. And when you see that, at least on my strategy, I like to bet with them. So when I see a bunch of orders in the book, I'm like, let me match them. You know, there's millions of dollars down here. They probably have some type of edge that the average retail trader doesn't. And then if you see at the top, look at all of these orders that got filled. We had about 2,000 Bitcoin get filled here. And technically, we call that the top. This was a fake top. This was the
Correct.
actual top, and then we just distributed after. So this is
the gold chart also validates that fake top, real top narrative as well when you denominate in gold.
Yeah, 100%. But on the flip side, the last thing to say here about the order books here on Bitcoin is Coinbase is pretty empty. We could see there's a lot of people that want to buy down here. Got about 600 Bitcoin.
Wow.
And then up here, only about 40 Bitcoin to push us back to 95K. So that doesn't mean we're going to go right up there. But what it does mean is that, there's not too much resistance up there, at least on Coinbase. So that's kind of how I look at the order books. And the last thing here, I'll just cover XRP real quick. Coinbase also had a super positive skew. So if we look, this is also why yesterday, or what was it, a few days ago, was really ripe for a bounce. We could see how thick the order book skew here got on XRP. We could just go back over the last year and a half. That was a lot of people wanting to buy XRP, below the 170 to 150. And then right here, similar concept. We need to get above this level that matches what Bits was saying with this 21-day EMA. If that gets regained, we have a clear structure break on the chart. As of right now, we're still kind of on a retest level. And then there's still just a lot of people down here that are, waiting to potentially get their orders filled. And then the last thing here on Binance, not too much to pull from this, but similar view. We had a lot of orders down here. We could see how the orders got spiked to about 13 million right at this low. And then a lot of those got pulled as price went higher. And then as for the top, we can't say too much besides a lot of people have been putting sell orders up there. So not too much to take from that. So yeah, I just wanted to throw those up there because, the order books do give you a good idea of what's actually happening behind the hood. And
Dude, that's gangster, man.
It is very much
it's
gangster.
Cool. It's cool stuff. I know Price loves them.
He definitely does, dude.
Yeah.
And for people, by the way, Don, for people who are unaware exactly by what you mean by the order book or by the order book, and they're thinking, okay, whose purchases are those? Have they been made yet? Are these purchases these are people's buy limits where they're they're ready to enter should the price go down there? Is that what you're talking about?
Exactly. So I'm sure we all know that we could enter the market through market orders, or we could enter them through limit orders. And we consider people that enter through market orders aggressive participants. And then people that enter through limit orders, we call them passive participants. So essentially all of this analysis is doing is looking at, who's waiting to buy, who's waiting to sell. And we could see this is the regular order book you'll see on any exchange. And as I move, you could see that it's going to show you on the chart where that line is. And it's going to give you bars of, okay, we have 1.22 million XRP wanting to be sold. We can't say who that is. It could just be one person. It could be an entity. It could be a lot of people with their orders there. But yeah, that's
it could be spoofing as well, right? Because you'll see that on here as well, right? Post only type stuff.
Oh yeah, yeah. Without a doubt, you could see a lot of spoofing, and that's why I like Trading Light though, because you could see when people are spoofing. It's all these orders. This was spoofing. This got pulled. This just popped up. That got pulled.
I see.
You could go through and say how long have they been there? Are they still here?
Oh yeah.
If you want to see the nitty and gritty, you can go down to basically the footprint here and see. Okay, did this get filled?
Wow.
And yeah, this order right here was 340,000. We could see that did get filled because we have that big, volume spike right there in the footprint. So it's definitely a more advanced way to look at the market. But anyone who feels like they could analyze charts good, I say definitely check out order books, start playing with them. They could just add confluence to your own analysis.
Very nice. Very nice.
Beautiful.
Bits, was there anything else you wanted to show? There was a question here from Above the Cloud asking us to look at Ohm. I guess I saw Ash Crypto tweet this a little while ago saying the chart crashed 70% or something. It says apparently I don't know what Ohm is or
Ooh, I don't know what it is either, but it went to.
Do you? Let's have a look. Oh my God.
Holy crap.
What is this? What is this, like a meme coin or something? Or what is this?
No, that was the strongest coin in the last 5 months.
Yeah.
Oh, okay. Wow. That's
incredible.
Is this the bottom? I mean, it looks like this potentially could be the entry, Dom. What is this?
I mean, there's definitely something here if you're a gambling man, maybe, but God, that's got some speed to it.
That's on the week chart though. You're on the week chart here.
Yeah, I mean,
Oh
well,
my God. Okay, it
I
doesn't
mean,
matter. I guess
it doesn't matter,
It's-
dude. It's
it's
yeah,
supposed to just happen.
you get more detail, but it's the same price. Yeah, golly, that is
Jesus.
and it's gotta. I mean, if it loses this, it
Oh
doesn't
yeah.
have a whole lot. It's gonna fly.
That's
Whoa.
bizarre. What just happened to Ohm?
I don't know.
Like,
That
okay,
is
so
something.
Time to check the tweets. Maybe like is
Mooncake says the
dude.
Cabal team sends its regards.
Here, I'm gonna do a quick search for OM and just see
All right,
what's
while you're
coming
doing
up
that,
on.
let me pull up Dom's while you're pulling that up. Let's see
No,
what
I'm
Dom's.
looking at
Oh,
the
same
same
thing.
thing,
Same thing.
because
Okay.
you know who was big on this was Mr. Spread.
Really?
Yeah, Mr. Spread was huge on Ohm, and he had good reason to be. If I go here to my spaghetti chart, I'll show you guys what I mean.
Oh, love the spaghetti charts.
Yeah, let's see. Ohm was by far the best performer since
Really?
November, and here I'm about to confirm it here. Look since well, that's virtual, but if we get rid of virtual, we could see this is basically since December. See Ohm? This was Ohm right here. It was still up about 60% since December, and look at that line that just happened.
Oh my God.
So it just got completely rugged. The whole project must have been a scam. Something happened, or the foundation broke. Something happened with the tech.
That is brutal.
Because when I was looking at the spaghetti, I mean, look since January. Ohm was by far the
Wow.
best performer by a mile. I mean, this is the top 100. Look at Ohm. It was up here for months and months.
Interesting.
I mean, it kind of looks like some of the same shenanigans that happened around the FTX stuff, right? Or even, yeah. I mean, this is what I don't know what the heck's going on there, man. That's brutal.
You know what it reminds me of? It reminds me of Teller. You guys remember TRB?
Oh yeah.
Teller had a very similar thing. I'll show you guys. One day it pumped. Look at this.
Yeah.
It had this crazy pump up, and it dropped about the same. It dropped 80% in one day. And of course it's died since, but that's bizarre. Did you find anything, Bits? What happened?
No, just people losing their minds over it, man. I don't know.
It says the Cabal team behind its exit position. Like, so,
I mean,
yeah.
it's what it looks like. It looks like a rug. That's wild.
I've been out of the meme coin game for a while. Is this a meme coin? Like, what is Ohm? I don't know anything
No.
about
This is a competitor to Ondo. This is a RWA real world asset project. It was a legit project without a doubt.
That's brutal. Wow. Yeah. I was just telling someone on the phone, like, I'm so bullish on certain sectors of the industry, but knowing which teams are going to make it and which companies can make it truly, that's a different story. Like, you don't know. And you don't know how competent they are. You don't know if they can handle the moves up and down the market. You don't know how long-term their VCs and investors are. The sector might be great, but trying to pick a winner is difficult, especially after seeing something.
I feel like this is why Bitcoiners, like the maxis, they call everything a shit coin other than BTC. I mean,
Kate, if you pop
hard
that
to argue.
pop that over to my chart, look at what's happening here with the order flow. There's been a massive amount of spot buying that's occurred. There's been like $30 million bought on the spot market since this dumped. Let's see where this came from.
Ooh, we're about to get some alpha here, I think.
OKX, Bybit, everybody is buying a shit ton of spot. Besides Binance, look at Bybit and OKX. They ever since this occurred, they've been loading up their spot bags. And look, it got it like almost all of the open interest wiped out on all the leveraged longs. So let's just see who triggered this, because it wasn't the spot market. It looks like the perp markets triggered this. Let's see if we could figure out what venue this was from. Looks like Binance was on board. Bybit was also on board. OKX doesn't have it. Let's see if Hyperliquid. No, so it's either Bybit or Binance. And then if we go down to this is the lowest time frame. So yeah, we can't even really see. This all happened at the exact same time. This looks like a coordinated attack to me. This totally looks like a coordinated attack that actually happened on the perp market. This wasn't triggered by spot selling. This was triggered by perpetual selling, surprisingly. So this is like a manufactured thing. This might be a buy the dip. I don't know. Who wants to step in front of the 85% drop?
My God.
87%. The whole thing just got wiped out. That's insane.
It is at an interesting. I mean, I don't know.
Let me see if I could see what happened here. No, nothing happened with the funding and the premium. So yeah, this is bizarre. Funding is extremely negative though, so that means that a massive amount of shorts are in here.
Yeah.
So watch, if this thing could base out, we'll get like a crazy short squeeze back up to there real quick and then probably do that. If you're a trader, I would be locked to this chart for the next 12 hours.
I can see where Dom and Bits are going to be after the stream ends.
I mean, this is like some high
Oof.
frequency.
They're like, hey, babe, we're canceling lunch and dinner. I'm going to be on the computer.
Yeah, I wish I could get more
Holy smokes.
granular data. If I could get 1 second chart, we could see who really triggered it, but only the 1 minute doesn't show us enough.
Interesting.
Just the
Bits,
crazy
yeah.
part is that this was not spot selling.
Yeah.
Look at what the spot market's done since then. And then this is the perp market.
It sounds insidery. It sounds like an inside move here. It's got to be. I mean,
Definitely.
you just said it's not. If it's not spot, then someone was ready for this and they had planned for this.
And whoever that is just bought $30 million worth of spot. Or
Wow.
you know, these might be,
That's
this might be a lot of people, but this is not normal. This is bizarre.
People are saying it's the team that they had a lot of supply.
That's bizarre.
Well, above the cloud, thank you for bringing this up. It's a pretty fascinating situation we've got here, I guess. You could call it. Wow. What a drop, dude. This could be a generational opportunity, Bits.
Nah, I don't know, man. I might play with the small size maybe, but I don't know that I'm like, yeah.
Yeah, we'll see what happens. Look, I got to bounce here in a minute, but
Yeah, me too.
this is an excellent stream. Seriously, it's really, really high level. It's a funny way to end the stream as well to pull apart this coin here. But is there anything you guys want to leave to the audience before we wrap the stream? This has really been an awesome one, and definitely for people who are watching, definitely follow both these guys up here, right above our faces if you're on X, and if you're on YouTube, right below in the description you can find them. And by the way, if you're going to the Bitcoin conference, save 10% on your ticket using code WOLF. That's down below. I'm not sure if it's down below in the description on YouTube, but it's definitely in the tweet below the stream on X. The whole Wolf team will be there, and it's going to be a crazy time to be alive. It's going to be in Vegas this year, so you'll be able to gamble your whole life savings away while also getting to see some of the leading Bitcoin people. So definitely go there because we're going to be there. It's my favorite conference ever. Definitely worth going, I think, and engaging with the people IRL because the streams and spaces are great. But being able to meet these people in person, I think is the move. I gotta get out there and meet up with Bits one day. I was able to meet Dom out here in PR a little while ago.
Yeah, we'll link up, man.
But
yeah,
absolutely. But yeah, Bits, anything you want to leave the audience with before we wrap?
Nah, look, I mean, I think right now it's just going back to kind of like what Dom was sharing in terms of perspective is, it's a time to kind of just be watching the data. It's okay if you're also watching the news and keeping up with kind of the narratives and stuff, but at the end of the day, it's all going to show on the chart. So just kind of follow the data, be willing to pivot. Both Dom and I kind of talked about that, more recently, I think we've maybe been a little bit more short-term focused than we have traditionally, but that could change quickly. So yeah, I would just say, just continue to level up, continue to learn some of this stuff. Start looking at order book stuff if you've never looked at that. Look at high time frame charts if you've never looked at that. Look at correlations between crypto and stocks, just equities, gold, like everything, and just start to realize that we're not in the little bubble anymore. I think we've gotten too big. We've got too many people playing in the space, and there's a lot of factors that can kind of I don't want to use the word manipulation, but can kind of impact or push us or pull us in different ways outside of just the typical crypto participants like it used to be for a long time and for a lot of the for a handful of the prior cycles. It was just us, but it's not just us anymore. So,
Yes, sir.
But yeah, no, man, I enjoy these. Dom, always a pleasure, man. Really enjoy your perspective.
Absolutely.
And kind of our little back and forth on how we look at stuff. Just thoroughly enjoy these.
Yeah, without a doubt. I think, what Bits just said there is important for anyone watching still. Trading isn't about finding like this perfect strategy. I know so many people that can use completely different tools, but get to the same thesis. And maybe you learn that today, how maybe me and Bits might use different tools, but we can sometimes get to the same exact thesis. And I think when a lot of people start trading, they get involved in this market, they're looking for the secret strategy. I'm here to tell you it's not here. You know, you have to use what works for you. There's no secret strategy besides Bit's secret indicator, which I'm sure we'll do at some point. But you know, it's an important thing. I see some people that are like they spend months trying to find like this perfect setup or this perfect strategy. And sure, you might have good setups and whatnot, but just know that like markets are ever evolving. And to think you're going to crack the code and it's going to work forever, it's just not the case. You know, people, even the best traders, they got to completely always refine their strategy, always refine their approach. And on that point, the last 6 months have been the most different times I've seen in this market since I joined it in 2017. Like this market is evolving very fast. And I think the days of thinking you could buy crypto and make thousands of percent, maybe if you get lucky on a meme coin, sure, but those days are over. So if you really want to capitalize on this market, the big boys are in town now. The big boys are now in town. They're involved in this market. You need to, you know, get your feet wet. You need to put your head down and you need to learn how to trade if you want to extract a lot of money from this market. Thinking you're going to buy and hold and make all this money like you did in 2017 or 2021, I don't think that those days are here anymore. And I honestly don't think that they're going to come back. Everything that's happening in this market with the regulation, with it becoming more fundamentally sound, like we're entering the era where crypto should do something in the real world. You know, it's crypto is no longer, in my opinion, going to be this place where we have thousands of coins that do absolutely nothing but pump to billions and billions of market cap. Like if you're going to hold alts, make sure you're holding alts that you really believe in, that there's really a passive flow behind. There's really people that are interested, or it's going to get integrated into some type of solution for the real world, whether that's the economy or, you know, just the overall financial system. Like, you know, those days I just think are over. So anyone who is watching, I just think it's super important to realize that, you know, the old days of crypto they're just not here anymore. And the best way to put it, to sum it up, is easy mode is over. And I hate to say it, it even makes me sad. I no longer can tell my friends like, hey, you know, buy this, buy that, you'll make all this money. Those days are over. Like if you want to buy Bitcoin and screw off for 5-10 years, yeah, you'll probably make some money. But to think you're going to make 1,000% in a year or whatever, it's just, those days are over, in my opinion. So be very selective. If you want to spend time in this market and you really enjoy it, the time and the way to extract it is through trading. And trading takes a lot of time, takes a lot of effort, but anyone can succeed in trading. You just need to really put your head down and you need to not give up. And, you know, it's like, that's really the best way I can put it and to sum it up is, you know, we're entering a crazy time. And that's why I say, who cares to look 6 months or a year in the future? Things are changing so much different, so fast. To think that we could just buy, spray and pray, as you say, Cade, those days are over. And I will love to be wrong. I'm hoping I'm wrong on this, but I'm like 95% sure I won't be wrong on this, that the easy days are over. And if you want to make money in this market, you have to really be a lot more sophisticated than you had to be in the last 2 cycles. So that's what I'll end it with. And, you know, I guess the last thing I'll end it with is, you know, if you're doing your own analysis, your own trading, try not to look 6 months in the future. Try not to look 3 months in the future. It's fine to give out some predictions or some, you know, longer term outlooks, but like things are changing so rapidly. It's probably in your best interest to look a few weeks ahead and then just to keep doing that. When those few weeks happen, look a few weeks ahead again, and then just continue to run like that. So that's
it certainly seems like that. Yeah. And by the way, one last thing on what you said, it's not even just trading, but like if you're trying to get ahead in this world, making money wise, you have to get like certified in something, or you have to get an edge or a special certification that allows you to make more money. Like if you're still making $10 an hour at a job, you're just not going to be able to get ahead. Like you just have to figure out a different way to make money. And so same with trading. Like it's getting to the point where you have to figure out a way to separate yourself. Otherwise, you will just forever be catching up and playing catch up. And you can't get ahead by playing catch up. You have to get ahead to get ahead. And so I think that's excellent advice.
Yeah, without a doubt. And, you know, I guess aside from crypto, you know, AI is going to be what the biggest industry is over the next 10 years. I don't think anyone's going to doubt that, question that. So, you know, if you're younger looking for a career path, I say, hey, you know, set out 5 years to learn how to trade. You could trade crypto, you could trade stocks. Trading will be around for a while. And then if not that, join an AI company, become an AI developer, there's going to be, that's going to be the biggest industry. And I think that those are probably the two biggest, best industries if you're technical and you want to be a part of the future,
Definitely. Agreed. Right on, man. I saw Bits had the bounce. It happened on the last stream as well, something with the connection towards the end. But I also got a bounce. We're going to go crush some, chest, I think, today. Sam's, he's texting me saying he's going to leave me behind if I don't leave right now. So I'm going to have to book my way over to the gym.
Yeah. Well, thanks for having me, Kate. I hope everybody
Absolutely.
enjoyed it.
Yeah, man, absolutely. Have a great day, Dom. And shout out to you, Bits, if you're watching from wherever you're at right now. I appreciate you coming through as well. Definitely give these guys a follow right above our faces. We'll catch you guys on the next one. Shout out to everyone who came through. Havoc, actually appreciate you, man. Appreciate Mooncake above the cloud who commented earlier as well. Catch you guys on the next one. Spaces and streams every single day here at Wolf. Again, use code Wolf to grab your Bitcoin conference ticket as well down below in the tweet. And go check us out and go see us all at Vegas at the end of May. Catch you guys on the next one. Take care. And